JJ the CPA here. Hope you're doing well. So, a couple of questions here. Clay and Greg had a couple of questions about this, and I actually talked to my banker about it today on my very own PPP. So, of course, each bank's going to be different in terms of how they're going to handle this. When you're looking at when did I get my PPP money? When do I got payroll? And can I use PPP money the first go around of the payroll? And the short answer is this. It's meant for payroll. So this is what my banker told me. It's meant for payroll. So when you have your next payroll, use your PPP funds for the payroll. And what he had indicated is, it's really with the payroll, really at the end of it, until further guidance, it's going to be based on what actually happened, like what was the actual payroll. He doesn't think, remember, there's no guidance on this yet. So once there's guidance, it could just blow all of this to water, blow all this out of the water. But anyways, what he had indicated is that when you're going to bring your payroll records, it's just going to be basically, from this date to this date. So funds were released, 56 days, there you go. Bring in the payroll records, what was spent during that time. And so there's kind of two practical matters going on here. One, my funds are sitting in a separate bank account. And then as I need it, I'm pulling the money out. So that's how the question came up. I was like, hey, we're running payroll, money funded sometime last week. Obviously what I'm getting ready to cut as payroll includes time before the 56 days. So do I need to prorate it? What's best? And what he had indicated is just from a practical matter, there's two separate issues. One is the forgiveness amount. One is you're using money to pay payroll. And so from his perspective, it was, well, you are using it for its intended purpose. It's not you're going to go buy a tractor trailer with it. So pull the money for the payroll. He did think it was a good idea to not pull money out for the employer taxes, because those aren't covered at all. He said, pull the money out because that's what it's there for. It's to help you make payroll. So make your payroll with it. And then when it comes forgiveness time, though, the documents you're going to bring in it's kind of irrelevant when you paid the employee until further guidance. It's what's going to be more relevant is from the day 1 through day 56, what was your payroll? Bring that in based on the payroll records. And that's why he's speculating that on 1106E, when it talks about bringing in the payroll records and all that good stuff, that's what they'll be basing that on more than, you got 56,000, but your first payroll period, only included 3 days. And so of this recent payroll, $3,400 is related to the PPP time period. So only pull out $3,400. Hopefully it answers your questions, which just means this. You got PPP money sitting there. You got payroll to make. Use the PPP to make the payroll. But now when you're doing your spreadsheet and you're trying to figure out, okay, well, what's the payroll that's going to be included in the forgiveness? It would be only the time period starting with your 56 days, right? So if on Monday, let's just say for grins, to keep it simple, let's say that when I cut payroll here on Monday, the 20th, I think that my money got funded the prior Monday, actually, which would have been the 13th. And my payroll's every other week, right? So it's 2 weeks. So even though I pulled money from my PPP account into my operating account that covered the entire payroll that was due on Monday. And even though it was for 2 weeks, which would include a week before the PPP, I did just pull the more money. Bank thought that was fine. Pull the full amount of money, put it in my operating to cover the payroll costs. Now, on my tracking sheet, it will only include that last week, meaning it won't include both payroll periods. It's only going to include, from the 13th on. So that one. So then when you're tracking what costs you have, then it's just going to be the actual. I had another one about, well, what about on rent and health insurance? Because it's 8 weeks, it's 56 days, and there's no guidance on that. But the realistic question has been put to the bankers here that I'm working with, and they said, really what it comes down to is, from our perspective, we're not going to count out 56 days for the rent, the 8 weeks or whatever. He said they get that that's actually what it does state, but they think from a practical matter, it's not going to be more than 2 months of rent. It's not going to be more than 2 months of health insurance that's included. But you got to understand, these are just the banks that are talking to me. There's no guidance. That's what they've said. I mean, the SBA hasn't put anything out. They think it'll come out at some point to really kind of clarify. But at the end of the day, you really have two things that are happening. Is I have PPP monies. Can I use it on the payroll that's coming right now, even if technically it includes payroll before? Practical matter is, from these banks' perspective, based on what I did, is yes, but I'm not going to pretend like that's part of my forgiveness, the time period before the 56 days when it comes time to calculate up the forgiveness. Now, it does include commissions. I mean, in terms of the pay that was included to determine your loan, includes commissions. So it does include commissions. I know that there's the full-time equivalent factor and then the salary factor reduction. If June 30, though, you really anticipate everybody's going to be kind of back on board and back to normal, it is true that then the head count, the salary won't count. When I've talked about it in other videos, more what I've said is, if you're trying to compress, payroll into 2 weeks, and you're trying to compress the amount, you're gonna get hammered there because you had no payroll or very little payroll and then a whole bunch of payroll. And the way you get hammered is you have all this payroll in the last couple of weeks that represents 8 weeks of payroll. That's where you're going to get nailed when looking at each payroll period. You're not going to get nailed if, here's the employees I have, I paid them each payroll period in the 8 weeks. Where you get nailed is, looking at a specific employee, here goes a raise. You're looking at the owner, here goes a raise. Or in the last 2 weeks, there's a whole bunch gets paid out. So when it comes to commissions, and then if someone's working 6 hours or 8 hours a day, I know we have the full-time equivalent factor to come into play. So yes, it will be looking at the hours. But if somebody's only working 6 hours, know this, technically, the way the PPP works is that it's meant to pay that employee full time. I mean, if they're normally full time and there's not enough work for them to do, so they're technically gone within 6 hours, PPP is meant for that employee to get full pay. And I know that with some entrepreneurs, it kind of messes with the mindset because it's like, well, I mean, I'm not going to pay them if they're not working. But the whole purpose of the PPP was it didn't matter if they were working or not, they're getting paid. So you kind of need to look at it almost as like, well, I mean, government's giving me a grant, pay them for the 8 hours. If they only work 6, they still get paid 8. But you do actually have to pay them the 8 for it to be part of the payroll costs, of course. So, it's a judgment call. I mean, in the sense of if for whatever reason you're not going to pay the 8 hours, even though I think that's really what the intent is here, then you're going to have some money left over at the end, and it'll just be what you pay back, or, you pay it back over 2 years, which is just more to say. I know that when you're talking about commissions, it's like, well, we got the commissions, okay, so we're going to pay them. We got PPP money, but then we got the money here. Do we use that money to go to commissions? I wouldn't sweat over that in the sense of what's payroll, use PPP funds. What's just your normal payroll? If you have commissions throughout the last 12 months that was used to arrive at your loan amount, and you're just paying them out in the same manner, in the same way, so to speak, granted, if somebody hits a $250,000 commission when last year their commission was only 50 grand, rest assured, it's, PPP money is obviously going to run dry, and then an amount kind of above what that employee made is going to be blown out of the water. Not to mention that you're going to be capped at the 100,000. If they didn't make 100,000 in the prior year, which it's just so much of a calculation to it all that I think what you do is this, just practical matter. Pull money from the PPP account to cover payroll. And then at the end, you present the payroll for the 8 weeks. That's what's going to be included. So if you're tracking separately, but I just think you're using the money from the PPP, that's going to cover your normal payroll. If for whatever you're doing, you're just going to pay people for the 6 out of the 8 hours that they worked. Now, if they're actually like clocking in and clocking out, still have them clock in, clock out. Not that there's any advantage to this in any way, but when you go to do the payroll, you can show, work 6 hours, and then there was 2, call it COVID hours or PPP hours, something like that, and then give them the extra, 2 hours. They don't have to know. The employees don't need to know that it's coming from PPP money or why you're doing it. You can take all the credit for it. Doesn't matter, because you're the employer. You're the one that went and got the PPP funds. You're the one that's created the business. So at the end of the day, I just say, even on is it hourly and it's commission and all that, just pay whatever it is that you're going to pay. And then you almost can't go wrong, because it's like, well, normally I pay everybody 8 hours. I'm just going to pay them 6 hours. And then when I get to the end, you're just going to have some money left over. That's all. And then, if you are getting in a situation with a commission, you might just individually look at what did that specific employee make, in the 12 months that were included in the loan. And that would only be in a situation where you're like, wow, they're getting ready to get some hefty commissions. So again, I just don't think with this, it's traced the same. Now, I know some of the banks that I've heard of are wanting you to segregate it out. But if your bank hasn't given you any direction on that, and if your bank just lets you put it into your operating account, then technically all you're doing is tracking expenses. You don't even really have anything different, to pull money from, to go, well, do I pull this amount that's only for the 56 days, or do I pull the other as well? So I'm someone that has a separate account, and I'm pulling the full payroll period. But when I go to get forgiveness, it'll only include the 56 days. So hopefully that was helpful, just to say 2 practical matters that are going on, the tracking. And then, since you have, for one of you, you have commission, and then you have hourly, and then you have, some working less than. That's why I just say, you can't go crazy, over worrying about it. And if you're really breaking it down, it's like, okay, well, what's my loan amount times 75%, and then take that in half. And that's like, well, that's what I have kind of in my monies here to spend. And then you almost might be in an opposite situation. A lot of the discussion has been, well, I'm going to take my loan amount times 75%. That's at least what has to go to payroll. And then if it's not enough, then where the issue is like, oh, well, we got to try and make up payroll. Because remember, if your regular payroll, just regular people, just the regular amount of people, if it ends up being more than 75%, it's still going to count. It should still lead to forgiveness. But if you're now adding employees in addition to the employees that you already had, if you're adding salary in addition to the salary that you already had, if you have 3 employees leave, but then you give yourself a big fat raise, well, now it's where you're going to have some issues, because the head count went way down and then the salaries went up, in essence, to cover that, salary per person. So, what I would do is, with your payroll company, you might be able to have them track it from the standpoint of just saying, hey, from this date forward, payroll company, I'm going to need reports that shows this is the start date of my payroll, so that when I'm done, and then maybe they can track it for you. So I know the company we're working with can do that, the payroll company, Or if you're using QuickBooks, you can do that because you just run a payroll summary starting with the date of the actual payroll. Now, if you are looking at some different ways to break that out, then it just kind of comes down to how you want to track it. And from my perspective, it also just comes down to, what your intent is here. And if your intent is, I got payroll, I need to make it, I'm pulling money here, I know that this is what's going to count, then, let chips fall where they may, and you'll end up in good shape. And if at the end, for whatever reason, because of FTEs and all that good stuff, if that does come into play, because not everybody is, for whatever reason, you don't have the same number of employees, or it's less payroll when you hit June 30, then, if you have some that quote unquote didn't get forgiven because of your FTEs and all that stuff, it's like, well, but you had the money to pay. And I know that there's a mindset of like, well, I don't want to get to the end and have to pay. But you have to almost think it like this. It's like if you get 100K, and let's say somehow the numbers work out to where you owe 11 back of it. The thing to remember is, it's like, wow, I got $89,000 though of free payroll. So even if the numbers come back, even somehow there's some weird calculation that leads to 11% not being forgivable somehow. And, you aren't able to have the head count back up because something changed still in your business. You couldn't get the head count back up. So there's 11,000 that you owe. So just look at the other side. It's like, yeah, but I got 89,000 covering payroll that I didn't have to pay out of my pocket. And so there was 89,000 less in expenses I had to cover. So even though technically you may owe 11, meaning you spent the full 100 grand, and at the end you go, well, dang it, I owe 11. It's like, yeah, but you had 100,000 of salaries, and you got $100,000. You spent, it wouldn't be a full 100,000 on salaries. I realize after I said that, but I got 100K, and I used, $89,000 of it on payroll. I used the other 11 on the other expenses. So I did spend the 100. I spent more than 75%. So you're like, hey, I'm golden. But then if your head count gets down and can't make any adjustment to that when you get to the end of June, and you go, well, gosh, I guess I'm going to owe 11 of it. Again, it's still like, yeah, but that also means you got 89,000 for payroll and rent and utilities and all that good stuff. And then remember, in your payroll cost, to hit the 75% of max loan, that includes the employer paid health insurance, employer paid retirement, as well as the SUTA. And so that's where, like, the SUTA, that's kind of a minor thing, but like, you're getting ready to pay, when I paid payroll Monday, well, it included SUTA for 2 weeks, right? So that's why it's kind of, as the banker and I were talking, it's kind of irrelevant to be like, well, I paid this, and so does that count? It's like, well, no, not all of it's going to count, because you get to include SUTA, but you don't get to include SUTA except for 1 week, and all the salaries for 1 week. So payroll company is probably your biggest friend right now, to get in front of them, to let them know what you're going to need. Now you know the start date, which is the disbursement date. If you have someone running payroll, then let them know. These are the dates we're going to need to know. Starting right now, what's the payroll? What's the head count? Each payroll period, be tracking all of that here in the 8 weeks. So hopefully that helps. That was a much longer answer than I anticipated, but I kept thinking of some additional things to add. So, all right, appreciate you all. Have a great night. JJ the CPA, out.